We're calling it a triple treat this morning. And that's because there are three things that have taken place. On the one hand, you've just mentioned the meeting between Donald Trump and Putin took place over the weekend, and it's not considered to be a fantastic meeting, but there's no big negative from that either. So from our perspective here in India, the prospects rise for the possibility of a push down the road for the rates that were set to increase, that 25% additional tariff. There could be some benefit or some leeway given going forward. That's one aspect. The second aspect, of course, has to do with the GST rationalization. And this is something that was expected to take place. There was expected to be a move to bolster the domestic economy. And of course, in the recent past, Prime Minister Modi also making statements about Swadeshi and buying Indian. There was something that was expected from the government, and this is a bonanza, a lot of people are saying, because you have now the move towards two slabs, the rationalization of the GST regime, and quite a few important spaces will see a benefit. Most importantly, you'll have automotive companies that will stand to gain, a few others as well. But the way that the markets are seeing this is a big positive. Of course, we're still waiting for that 9:15 mark when the market opens completely, but the pre-open rate suggests that there's going to be a positive uptick. 1.25% is where it's settled at after that pre-open session, and you have automotive companies, understandably, that are reacting the most positive. You have Maruti Suzuki, which is up about 6% or thereabouts. You have Hero MotoCorp, that's up about 4% or so. You also have cement companies that are reacting positively, because you could see an impact or a positive impact for these companies as well. Life insurance companies also reacting positively. Now, we were speaking to a tax expert earlier on in the day to talk about how this would impact the government finances, if at all. And what he was pointing out was that in this 28% band, and for the viewers that have tuned in for the first time right now, you have a 28% band that goes away for GST, and you have the 12% band that goes away for GST as well. By the way, the markets have opened right now. We'll talk about that in just a bit. The Nifty 50 gaining about 1% or so, 250 points in the green. This was anticipated, and it's holding at this point. The worry or the fear was, because we've seen so much selling by foreign institutions in the recent past, if there is an uptick, and there is in fact an uptick, will that get sold into over the course of the day? So that's something that you would want to watch out for. Let's also take a look at how the broader market, so this is just the top 50 companies, but let's take a look at the mid-cap index and see where it's at, the small cap index as well, because that will give you a sense of whether or not this is a broad-based move. And indeed it is. The mid-cap index, that is the smaller companies, are gaining about 1% or so, and the small cap index is also gaining over 1% or so. So let's talk about individual sectors, and I would invite you to have a look at the sectoral performance across the board, and it's green across the screen. So take a look at some of those sectors that are doing particularly well. This is exactly what I was speaking about before the market opened. The automotive companies stand to benefit the most because of this GST rate rationalization. Particularly small cars are set to benefit, with the rate coming down from that 28% mark quite dramatically. And you will see two-wheelers also benefit. So consumption push is what you should focus on this morning. Consumer durables set to benefit as well, up about 3% or so. And I would say that from the finance pack, you have the insurance companies that are benefiting. Even at the bottom of the list, healthcare companies gaining about 0.2%, not a single sector in the red. But let's take a look at the Nifty 50 and see what is moving in trade today. And I would hazard a guess to say that most stocks are in the green. And take a look at the top performers. Hero MotoCorp, which understandably is going to benefit from a consumption push, is gaining the most, 8% or thereabouts, because when people go out and buy things during the festive season, there's an expectation that two-wheelers and particularly motorcycles will benefit in rural India in particular. Up 8%. Maruti Suzuki, which is the largest car maker and also specializes in small cars, which is likely to see the biggest benefit, is the second largest performer, best performer, 6% higher. Bajaj Auto also gaining quite considerably. Bajaj Finance is another big gainer. On the losing end, you have a few of the IT stocks that are not doing particularly well, and this is understandable. Nothing really changes for them. This uncertainty about global trade continues to hang like a cloud over these companies, and HCL Tech, in an otherwise very strong move for the benchmark Nifty 50, is the top loser, down about 0.4%. TCS also just about flat right now. So take a look at some of the cement companies, though, because this is really where the story might be. You have the likes of Ambuja Cement is up about 3% or so, ACC up about 2% or thereabouts, India Cement also gaining about 1.5%. And what I also find interesting is that the change in the sin goods. Now, understand that in the GST space, there's now going to be 2 slabs. This is the proposal, of course. It has to be cleared by the GST Council, but there'll be a change in the treatment of sin goods as well. They'll be taxed at 40%. Of course, the implied tax will be significantly higher, but for something like an ITC, there's no big negative because nothing really changes on the ground for them seemingly at this juncture. At least that's what the indications are. So ITC is not moving too much. Godfrey Phillips, let's pull that up as well. As another player in the tobacco space. It's moving about 3.5%. So there is some impact. I would think that ITC, you might see an impact down the road, but broadly, what we're talking about this morning is the positive reinforcement of domestic consumption, which is coming in from the GST announcement, and also a somewhat positive development from the Alaska meeting with Donald Trump and everything that's happening with President Zelensky today or later today. But also remember that the talks between India and China on trade are expected to take place. Wang Yi visiting India shortly today, that will take place, and so the thawing relations there might have a bearing. Of course, the last point that I will make here, and what could also be playing out for the Nifty 50 and for the Indian equity markets, is that earnings for the first quarter were not as bad as anticipated. In fact, was to a large extent better than anticipated. Earnings have grown for the Nifty 50 companies by just under 10%. And that was better than anticipated. So all told, very positive for the Indian equity markets this morning.